Hey everybody, how's it going? I hope you're having a nice weekend so far. This is Sami Abusaad with a list of swing ideas for next week. First, let's spend a few minutes talking about the market. The Qs had, as we all know, had a deep pullback on the daily chart that broke the 20 and didn't break support, but it pulled back deep into support. So this is support. If we were to draw a box around it, you could say this is kind of 80% of it, and we pulled back halfway through it. Strong bullish markets don't pull back into support. They pull back to the top of support and stop at it. And it usually coincides with the rising 20. So as you can see, we pulled back way below the 20. So this was definitely a bearish pullback. We also pulled back from a rounding top with a nice narrow, big, narrow topping, a narrow body bar, which is bearish, a reversal signal. So what I wanted to say is when you have a deep pullback like this or a bearish pullback like this, usually, most often, markets don't just go all the way back, right back up. There's the back and forth. So we saw the back and forth here, and then now we got the retest. To tell you the truth, on Friday pre-market, I discussed the potential of getting a retest, and meaning getting a red bar, and then tomorrow, maybe on Monday, taking it out. If we do, then I'm all out bullish. Okay, if you look at Apple, you would see that it did exactly the same thing. It was a deep pullback, broke the 20, deep into support. Look what happened. Started to go higher, but retested the red bar, and then the bulls confirmed by taking out the red bar's high, and then got right to the prior highs, and then came in, but got to the target. So that's what I'm looking at the Qs, is we got the retest of the 20 MA and support. If we take out the 2 bars high, or the high of both bars, then we should go back all the way to the top. So that's the line in the sand, very, very clear line in the sand for me over here. If we take it out again, we should see the prior high. All right, so that's my take on the market. I want to quickly give you my watch list for next week. I just have a few items. Bullish, I have the CLNY. Looks good. It's a transition A breakout on the daily, but it's also a transition A on the weekly. Let's take a look at the monthly. Monthly is very, very extended, so it can move up. I like the CLNY. This won't be the first time I'll play it over the base, stop under it. So I like that long. The NMIH is a little thin, but as you can see, we have a base breakout, okay, on this NMIH. I'm not going to talk too much about it because it's pretty thin. The YEXT is in one of those super trends, right? If you zoom out, you'll see what I'm talking about. It's been on fire. That's the daily. Here's the weekly. Here's the monthly. While it's extended, very, very extended, the truth is on the weekly and the monthly is extended. On the daily, it isn't. But the truth is, extended stocks often get just more and more extended until they go climactic, and then the trend exhausts itself. So this is not extended on the daily and is in a super trend. So I do like it higher also. This one will have to prove itself because the last attempt to go higher, we couldn't make new highs. So this will have to prove itself before I get in it. And then the last bullish item that I have is the ZGNX. It's one of my favorite. I don't know that it's totally ready to go back up, but if you look at the weekly chart, it's got a bullish, a bullish uptrend, but a pullback to minor support. You might say, well, isn't this also kind of almost 100% retracement? You would be right, but it's the only time that you're allowed to have 100% retracement and still call the pattern bullish is when you have a base breakout. That's the only time that, according to the pristine method of trading, it's totally okay to retrace 100% of the initial move and not wait for a secondary entry necessarily. And that's actually the strongest type of a buy setup you can have, which is the buy setup that comes after a base breakout. So again, you have a base breakout, and then you have a pullback to the top of the base, which is a huge area of minor support off the rising 20. And that's sort of what we have here. The reason why I said it may not be totally ready is because of the daily chart, right? The daily is a little messy. We still need to clear 50-50. but can also be played over just this little base that it formed the last few days. So those are four long watches for next week. Some short watches, I have a few more. DLTR, beautiful looking sell setup. Had a professional tier 1 gap down, maybe not quite tier 1, but was a powerful gap down. And now we have a retracement and a sell setup. Extended, but that's okay. Why is it okay? Because it came after a gap. If it comes after a gap, it's okay for it to be far away from the 20 MA. So the DLTR is a gorgeous looking sell setup. 5 is more of a counter trend trade, a little climo, way, way, way up on the monthly. I showed you the weekly, and here's the daily. On the hourly chart, we just have a nice looking base breakdown setting up. So under the base, stop above the base. So it's pretty good. Target would be the rising 20 and the gap fill. So that's the 5. INFN is a base breakdown on the hourly chart, extended, but it did have a couple of gaps, so that's okay. MCFT, little thin. It's a transition C, or a breakdown on the hourly chart. The transitions that I'm talking about are based on the atom, or the basic unit. So that would be A, the breakout, B is the retest and failure, or the climactic sell setup, depending on how the stock sets up. C would be the breakdown, and D would be the same as B, is a climactic buy or a retest and failure. And then this would be stage 2, the uptrend, and that's stage 4, right? So this would be a transition C, which is right here on the hourly chart, on a climactic, semi-climactic, daily, weekly, monthly, largest bar after a long extended uptrend that's lasted 2 years. So it's pretty interesting. I've been watching this for, I don't know how long, but for a long time because of the monthly chart. I mean, just look at this rocket. Look at this, amazing. So I'd like to see a retracement. It's kind of like the MDGL, and it's working as a short. So the med as a climactic run up, daily, weekly, monthly. Daily, I like the reversal that we got on Thursday, and then the inside bar on Friday, and then on the hourly chart, as you can see, we have a transition C. The target for this would be the 20 MA on the daily, perhaps a little bit more also on the weekly. MIK is the same as the DLTR, a gap down and a sell setup. What's nice about this is this would be kind of a secondary entry, or has confirmation. First, a lot of bars here, which creates a rounding top, plus notice the tails. So every time it attempted to go higher, got sold, and now we will be doing triggering a sell setup with a changing of the guard bar. These are the concepts that you might be hearing here. These are all concepts that we teach in Trading the Pristine Method class, which is offered on the website t3live.com. So that's where all these concepts come from, and I teach that class, and I trade the strategies taught in that class. ROL is a climactic sell on the daily, also pretty climactic on the monthly, weekly. So I like it for a retracement. Could drop $3 easy. Starbucks is probably the most difficult setup that I have on the list, but it's also maybe the most interesting monthly chart. Broke down badly and has a 3-month run up into resistance, into that curling 20 MA. So I like it a lot, but on the monthly chart, but the daily is very, very hard because we have a rising 20 below, and we don't have a setup. So this is more of a wild card play. Okay, a wild card play. SONO had a tier 1 professional gap down about 4 days ago, and now has a breakdown. So breakdown on the hourly, breakdown on the daily, under the base, stop above it. So I do like the SONO. And then wage definitely topped out. It's similar to the Starbucks on the monthly, a lot more bearish, I would say. But the problem is it's at multi-year support. So that's kind of the problem. On the daily chart, we have, let's go to the daily. We have a 1, 2, 3. So we have a gap down, an inside bar, and then potential 1, 2, 3 short with an entry under 40, the whole number, with a stop over 42.05. So it's a big, big stop, but it's also wouldn't be a swing trade. It would be more of a core trade. So that's kind of my watch list for at least the first part of the week. I scan every single day and I update the watch list and I call these plays. Not every single one of them. I select a few, the best ones, and I post them for the strategic swing trader members. If you're interested in that, you can just go to t3live.com/swing to learn more about the program. I hope you enjoyed today's video. I hope you have a great rest of the weekend, and I will talk to you next week. Take care, everybody.